Welcome back to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined, of course, by Jonathan Haddad.
What's up, everybody? Hope you're doing amazing. Tommy, hope you had an amazing week, my friend.
It was good. It was a good week. I spent the week in doing some bad moderation over the weekend. So it wasn't bad. It wasn't too good. It wasn't too bad. So we do have some broker buzz questions this week. We're going to dive into that, talk about some of the more prevalent discussions going on in the group. And then we're going to also have a fortune cookie, and we're going to have the sales pitch where John teaches us a sales tactic. And then we're going to have story time with John. So first, we must start with our fortune cookie.
Yes, fortune for today. I will take this one. Your mentality is alert, practical, and analytical. Lucky numbers 4, 8, 10, 11, 19, 37. Your mentality is alert, practical, and analytical. You know, I love this right now. It's funny. So I've been on a pretty wild workout regimen over the last 3 weeks now, where just getting back, with AIME and my kids. I have 3 kids now with next door lending. I still originate loans. I still do that. I do all of it. I let go of the gym, and it caused just so much angst and anxiety inside of me. I won't lie to you. It's about the last 3 weeks now. I've been super consistent. The mental clarity I have is something I cannot explain to people, how alert, how dialed in I am. Even my sleeping is getting better. I bought Blu-ray glasses to help me sleep at night. Like, I'm taking it super serious. And that's why this one made me smile when I read it. My mentality is alert. And I would challenge each and every single one of you. If you don't feel alert, if your mind feels foggy like mine does a lot of the time, my challenge is, what are you doing to work on yourself? Are you going to the gym? Are you checking in with your doctors? Are you working on your blood work? Are you taking the right vitamins? Are you doing the stuff you know you're supposed to be doing before you just sit back and say, oh, I have brain fog? Because I was that person. Dude, I'm just tired. I got brain fog. It's just this. It's just that. Turns out I just needed to work out. Turns out I needed to be consistent. Turns out I needed to have a diet, by the way, because going out as often as I do meeting with brokers, you're eating out a lot. And so shifting all of this for me has been huge. So that's the first step. Obviously, practical and analytical is a big deal. But the big one for me with this, Tommy, was for sure my mentality is alert. That is absolutely spot on.
This is definitely your fortune.
Mm-hmm.
I need to start going back to the gym. I have not been on 3 weeks. I saw your message this morning to me, and I was just like, oh, yeah, no, I'm not doing that.
No.
But I do have a rowing machine downstairs, which I do. And that does help a lot. So maybe I'll get back on that later today. And this is my inspiration to do that.
Dude, the rowing is incredible, too. That just completely, I did Orange Theory for quite some time, and they have a lot of rowing incorporated into it. Mm-hmm. You use muscles. You were not even ready to use rowing, man.
I rowed competitively in high school. It was.
Oh, I did not know that.
Yeah. So it's the workout I prefer. It's one and done. You do that and then you're done. But I want to dive into some topics of the week. So for the broker buzz, our top discussion point number 1 is, what are the pros and cons of doing loans for tiny homes? Is it worth your time?
So, okay, tiny homes. There's been a lot of buzz going on around these tiny homes. I've actually had a lot of clients reach out. You're seeing them a lot in places like California, obviously being a big factor, even Texas, Florida. And basically, these companies are bringing in houses and they're putting them together similar to a manufactured home or process. It's actually a little bit easier than that. And then they're assembling them. And in some cases, they can require some very minimal financing. Some of them do get pretty expensive, which was very shocking to me since they are tiny homes. And the idea was for affordable cost of living. But when you look at some of these prices and the fact that they have to get financing, I'm like, that's like a small condo that you could buy. There isn't a lot just yet, just to be upfront with this group. There are a few niches and one-offs based on the type of loan and the way that it's structured that you can do with some lenders. But real talk right now, we got to just ask a lot of questions and figure out if this is going to be a big thing for us in the future moving forward. So I don't have a lot of insight. I don't want to give you any kind of BS when it comes to who can or cannot do them. It's been a lot of just calling people, asking a lot of questions. We do house them. The loan amounts are generally smaller because they're financing a small amount for the tiny home. So it's great for some families from an affordability standpoint. And if you have the ability to help finance, by all means, make it happen. I think you'll see a lot more of this over the next 2 or 3 years as this becomes a much more relevant thing. And you'll see Fannie, Freddie, FHA, all of them start to jump in a little bit more on products like this, like we've seen them do with mobile homes over the years, and become a little bit less strict around mobile homes depending on when it was built. So I would not be surprised to see a lot of that over the next couple of years.
I was looking into the idea of getting a tiny home when we were getting our house. And then I looked at my comic book collection. I was like, oh, wait, that doesn't even fit. So
it just depends. Like it's the place, right? There is people for it.
Absolutely. All right, moving on to our second question. What is the biggest reason for a PIW, a property inspection waiver?
So this is cool. We've been seeing a tremendous amount of these. I actually just got one of these. It was so new rule, Fannie and Freddie now. Basically, you can do 3 or 5%, and you can get an appraisal waiver with a data inspection. So what that means is the system will say, okay, we think the house is worth $500,000, but let's send out our third party person to go check. Usually it's a real estate agent. A lot of the times is what I see. They'll just go and make sure that the house is up to standards. They'll check a few boxes, and they're just verifying the data that Fannie or Freddie already said was good to use. This is a property inspection waiver. So for purchases, if you put down 3% or 5%, you still have the ability to get this, but you need that third party piece I was telling you about. If you do 10% down on a primary residence, you have the chance to waive the appraisal altogether, believe it or not. So why is this becoming more relevant? Well, it's really simple. The data that they have on home values is better than it's ever been before. The amount of information that they're collecting, they're very close when it comes to considering and understanding home values. That doesn't mean it works in every single area. I know there's small pockets in this country where you're just not going to find the comparable. In this instance, though, Fannie Mae and Freddie said we have enough data collection from appraisals that we've done over the last 40, 50 years that we feel good giving you a waiver on certain transactions. Now, you can never get a waiver above $1 million. So if you're looking to buy a home for $1 million or more, you're not going to ever see that waiver. They just don't allow it flat out. But if you're doing a purchase and you're doing 10% down, have your loan officer, if you're a consumer, look into a property inspection waiver. This doesn't mean not to do an inspection, y'all, okay? Still do your inspection. Make sure the house works for you and your family. The appraiser is just simply saying, is this home worth its value? Because the person giving you money, the investors, the lenders giving you money, wants to protect their asset. That system comes back and says, we feel good about this protection. This is a big deal and such an advantage for your consumers. We're also seeing a tremendous amount of these on refinances right now. Why is that important? Well, let's just say you have a past client that you wrote a loan for 12 months ago, for instance. And let's just say that client did 5% down and had a 695 credit score, okay? Now, you just call them back to check in 12 months later. If you run it through the system, you might be able to get an appraisal waiver at 10% down now. So even though the client put down 5%, their house could have appreciated to give them 5% additional equity. And what that means for the client is their pricing on the loan will get better, and in turn could be a better rate for them. Why is that the case? Because investors look at this as risk-based. It is zeros and ones to them. As much as you might not like it, they don't care. There's no gray. It's black and white. Very, very simple. So in this case, the situation for them is, okay, if now you have 10% equity, that is more favorable for us, is what they're saying. Because they're saying, if you do default, I still have the good likelihood that I'll recoup my money if I sell your home. That's really what they're doing and how they're looking at it. So the more equity, the better. Check in with your clients, especially your past clients. Run it through the system, see what you can do. And on purchases, have these conversations with agents and consumers. The stronger the profile from your consumer, the better. So the higher the credit score, the more assets, all of that plays a factor when it comes to property inspection waivers. And it feels good, Tommy, to see these come back because we lost them for the longest time. When I say lost, we just weren't getting a lot of them. And now they're coming back, and it feels really good to see them on a lot of files.
Yeah. So is that because if you have more equity, there's less risk for the lender?
That always risk based. So you're pricing,
and you're decreasing their risk.
That's it. Like even so, example, look how much it plays a factor. So even if you have a client that's 620 credit score, okay, if that client puts 40% down, so 60% equity, I'm sorry, they have 60% loan to value, 40% equity. If they put 40% down, their pricing is almost as identical to somebody that has an 800 credit score.
Okay. So it's a balance of scales, and you're putting more weight on that side of the scale.
Yeah, well, you are, because why? What are they protecting? They are protecting their asset. As much as people think it's my house, it's not until you pay it outright. Let's just be clear. Someone's giving you the money, just like my house I'm in right now. All right. I did not pay cash, y'all. All right. For this house. So it's the exact same idea. They're saying more equity, less risk, therefore better pricing for you, the consumer.
But that doesn't necessarily mean more risk for the consumer, because they're
no idea is we'll give you a lower rate, right? Okay. And now you're a higher risk. They'll say, okay, we're going to charge a little bit more because you are a higher risk. We're going to take into consideration more of your credit score. That's why if you look at pricing, 10% down clients, one client that's 800 credit, one client that's 640 credit, your 800 credits pricing is significantly better because their risk is still slightly less than the person doing 10% down with a 640 credit score.
Got it. All right. For our last question of the broker buzz, we have, what is the best way to respond to a realtor who sends you this? Here's a prospective borrower. If you close with them, I'd appreciate a referral fee.
You know, I saw that one and I was just like, whoa, these agents are wild. Yeah, hold your ground at all points in time as a loan officer. Never, ever feel a certain way. Never feel like, don't ever feel like you have to walk on eggshells around agents. Don't ever feel that way because it doesn't matter at the end of the day. If you're ever in a court of law, they're going to ask you questions and you're going to have to answer them. So hold your ground. And if you want to be more polite about it, perfect. No problem at all. Hey, listen, with me, it's really important we build incredible relationships first. I'm going to do a great job with your client. And in turn, my idea is to help bring referrals back to you. That is my goal. I want to be on the same page because it's not easy to work these clients, as you know. But the referral fee thing is something I don't do because it's illegal. You can't do it. Well, I have so-and-so lender. Then I'm not the lender for you. I'm really sorry. I'm just not the lender for you. Their time will come, people. Their time will come. I promise you it'll happen at some point or another. Collecting referral fees. The law is watching. State regulators. It's going to get more strict. You will see fines. You will see people getting flagged for this. Matter of fact, the person that was actually one of the attorneys on the NAR settlement, who started the NAR settlement, posted recently about his next focus. And part of his next focus is this. Exactly that question right there. That's a huge focus for him. Joint ventures, referral fees, feeling like you're targeting a client and putting them in a certain direction and making them use a certain lender. It's coming, y'all. And if you don't think it is, you're very naive because it just happened to NAR. It'll happen to our side too. Shut that agent down instantly. You can shut them down with kindness. I'm not saying you got to be rude. You don't have to do that at all. That's just not how we operate. That's not how you should operate. If you do, I really will challenge you on there. There's so many other agents out there, and there's so much ways to strum up business, and it's not by that. I can promise you that without a doubt in my mind. Never done it, nor should you ever. That is just one person's opinion, and I'd like to say I think I'm pretty good on that opinion. I feel very strongly about it.
So would a proper response be to educate them on why they shouldn't? Oh, okay.
The agent, they know. I as much as I want to give them credit, there's the tests they have to pass, the continuing educations they have to pass, the continuing education I have to do every year now for 12 years of my life. It is, if you miss that, you're just ignorant. And if you're a brand new person, maybe I cut you some slack and I'll educate you. But most of these agents are like, they like to play, they want to play in this gray area. I wasn't sure. I heard so-and-so does it. Okay, that's fine. I heard so-and-so does it. You shouldn't do it. So agents, please stop asking your LOs to do it. You're putting yourself in an uncomfortable situation because, again, In a court of law, you're sitting down in front of a judge, in front of a jury. Can you answer the question with absolute confidence that you truly didn't know what you were doing? And the answer is you can't, and you know you can't. So stop. Please stop. It's going to hurt us. It really will if you don't stop doing this.
Well, that does it for the Broker Buzz this week. We're going to have a quick ad roll from membership, and then we'll be right back with the sales pitch training. Be right back.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first. Couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com /membership. Your community is waiting.